ADX just hit 31 on the daily and nobody's talking about it. Australian dollar to US dollar is compressed at 0.6950. One false breakout and the trap snaps shut. Here's the scalping zone for the liquidity grab, and the swing that catches the real move when China stimulus gets repriced. There is a trap being set in Australian dollar to US dollar that will punish breakout chasers on both sides, and I need you to see it before you take a trade. Price is frozen at 0.6945, and the ADX, the trend strength meter, is screaming 31.8, but the daily trend is neutral. That is not normal. That is a coil. And when a coil this tight releases, it shreds accounts. I'm about to show you the one danger zone above us, the one hidden opportunity below, and then give you two scalp plays and one swing trade that I'm executing today. Stay to the end because the swing entry isn't at the current price. It's at the level where the herd gets stopped out. MY session bias is range fade until 0.6954 gives way, with a bearish lean as long as the daily 20 moving average at 0.6966 caps. We are in a controlled selling environment that the market wants you to believe is a bullish base. That's the trap. The single invalidation level that flips this whole structure is 0.6966 on a daily closing basis. Write that number down. 0.6966. If the daily candle locks above that, the bearish thesis evaporates and we start targeting 0.7024, the 50-day MA. But right now the herd is positioned net long, expecting the 200-day MA at 0.6897 to act like a trampoline, and the dollar. Bulls are fading every risk rally. That means the market has a stop pull below 0.6912, and smart money knows it. So we're going to trade the fades first, then catch the swing when the sentiment resets. Let's walk the charts from top to bottom, and by the end you'll have the same conviction I have. On the weekly, the trend is neutral. The 20-week moving average is flattening out around 0.6980, and the 60-week MA is still sloping up, but price can't reclaim the 20-week. That's the first red flag. The weekly MACD histogram has been printing lower bars for 3 weeks, telling us bullish momentum is bleeding out. Yet the monthly chart still says strong buy, the 20-month MA is curling higher, and the long-term structure from the 2024 low remains intact. That's the conflict. It means the higher timeframe floor is that 200-day moving average at 0.6897, and as long as it holds, this is a pullback inside a bull trend, not a breakdown. But the shorter timeframes are dictating the trade right now. Drop to the daily. Here's where the tension lives. Price is sandwiched between the 20-MA at 0.6966 and the 200-day at 0.6897. The 50-day sits way up at 0.7024, far enough away that if we get a bounce, it becomes a realistic target, but it's also a gravity well pulling price down when momentum stalls. The daily MACD is negative at minus 0.004, but the signal line is starting to flatten, and the histogram bars are shrinking. That's a subtle bullish divergence building. The RSI is 43, not yet. Oversold, so there's room to fall before a true momentum reset. And the daily ATR is a tiny 46 pips, which means we are trading at half the normal volatility. That compression is a pre-breakout signature. ADX at 31.8 confirms there is trend energy. It just hasn't picked a direction. Now the 4-hour chart, and this is where the trap is most visible. The 20-period MA is sloping down at 0.6950, acting as dynamic resistance, and the 60-period MA is also bearish at 0.6970. Price has failed 3 times in the last 48 hours to close above the 20-MA. That's the rally killer. The 4-hour MACD is still below zero, but here's what most traders miss. The histogram has printed a higher low while price made a lower low near 0.6915 yesterday. That is a classic bullish divergence on the 4-hour, and it's exactly the kind of signal that precedes a fake breakdown before the real rally. This is why I'm not blindly short. The structure is setting a bear trap below 0.6912 on the 60-minute chart. The moving averages are tightening. The MA20 is 0.6940, the MA60 is 0.6935, and the MA200 is 0.6930. They're all converging around the pivot point at 0.693. That's the intraday magnetic level. Price is trading at 0.6945, just above that cluster, so the short-term picture is a microbid. The hourly MACD has just crossed above its signal line, giving a tiny bullish impulse, but it's weak. The danger here is a head fake above 0.6954, the daily R1 resistance, that sucks in breakout buyers and then reverses. That's the liquidity grab. I'm going to scalp. Cross asset. Australian dollar to US dollar is dancing with iron ore futures and the S&P 500. Iron ore bounced 2% overnight on China stimulus headlines, and that's why the Aussie didn't crash through the 200-day MA. But S&P futures are stuck at gamma neutral, and the VIX is threatening to spike. If equities roll over, the Aussie will follow within minutes. So the risk on link is the tether. Our precise support and resistance levels: S1 0.6912, S2 0.6888, S3 0.687. Resistance: R1 0.6954, R2 0.6972, R3 0.6996. Pivot 0.693. The levels are clean, and the market maker has already painted the liquidity between them. The overnight session repriced a very specific story. Chinese state media hinted at a new round of fiscal stimulus aimed at infrastructure, and that lit a fire under iron ore and copper. The Aussie got a bid out of the Asia session, gaining 0.23% to reach 0.6945. But here's the twist: the US dollar did not fall. The dollar index held firm, buoyed by hawkish Fed comments that pushed back the timing of the first rate cut. So what we are seeing is a commodity currency strength that can't overwhelm the yield differential. The spread between Australian 10-year bonds and US 10-year notes is still widening in the dollar's favour, and that's keeping a lid on any runaway upside. The RBA minutes showed a board that is clearly data-dependent, and with Australian employment data looming tomorrow, the market is reluctant to price an immediate hawkish turn. This is not a clean directional trade. It's a policy divergence wrestle where the Aussie only wins if China delivers and the Fed blinks. Right now, the market is pricing a 30% chance of an RBA hike in the next quarter, and that's not enough to fuel a trend. Institutional positioning tells a key story. The latest CFTC Commitment of Traders report shows leveraged funds have trimmed their net short Aussie positions by 12% over the last week, but they are still net short. Asset managers, on the other hand, remain structurally long, betting on the long-term China recovery. That means the stop-loss orders are clustered. If price breaks 0.6966 to the upside, leveraged shorts get squeezed and we could see a rapid melt-up to 0.7024. But if 0.6897 fails, asset managers will liquidate, and the sell-off will be violent. That's the powder KEG'd MY1 to 2-week directional lean. I'm neutral until 0.6966 breaks, then bullish, and bearish only on a daily close below 0.6897. The exact event that invalidates the entire neutral to bullish thesis is a daily candle closing under the 200-day MA at 0.6897. If that happens, I'll flip short and target 0.6800. Do you think the dollar breaks 105 on the index this week? Comment yes or no. I'm tracking consensus. Most people skip this section. That's exactly where the money is made. Keep watching. I'm giving you 2 scalps and 1 swing, each with exact numbers. Strategy 1, the opening scalp, scalping, high probability. This is a long from the pivot area that plays. The liquidity built at 0.693 during the Asian-European overlap. We want to see a tap of the 0.6935 to 0.6930 zone, exactly the pivot point plus the converging hourly Mars. The trigger is a 5-minute bullish engulfing candle after a 15-minute test of that zone. Once that engulfing closes, enter at market, expecting 0.6938 to 0.6940. Stop loss at 0.6922, just below today's Asian session low and below the S1 support. That's a 16 pip stop. Take profit 1 sits at 0.6954, the daily R1 resistance. That's a 1:2 risk reward. If momentum is strong and the 15-minute candle closes above 0.6954, trail the stop to break even and let a second TP2 run to 0.6970, the 4-hour 60 MA and R2. This scalp is instantly void if the 5-minute candle that tests 0.6935 closes below 0.6928. That would signal an S1 breakdown and the stop hunt has begun. The opening SCLP entry, 0.6938, 5M bullish engulfing after 0.6935 tap, stop loss, 0.6922 take profit 1, 0.6954 take profit 2, 0.6970, trail, risk, reward, 1:2.0R to TP1, invalidation, void if 5M candle closes below 0.6928 strategy 2, the liquidity grab, scalping, counter noise. This one exploits the false breakout above a 1. The market knows there are buy stops piled above 0.6954. We wait for price to spike through 0.6954 on a 15-minute candle, wick above 0.6960, and then fail, specifically, a 15-minute close back below 0.6950 with a bearish engulfing or long wicked rejection. That's the trap snap. Enter short at 0.6948 once that rejection closes. The stop goes just above. The wick high, at 0.6966, which is also the daily 20 MA and the major invalidation level, so it's a logical stop of 18 pips. Take profit is fast at the nearest intraday liquidity pool, 0.6925, right above the pivot and S1 zone where dip buy orders sit. That's a 1 minute and 1.3 seconds risk reward, but the win rate on this setup is high because it aligns with the structure that has held all week. If the 15-minute candle after entry prints a full body above 0.6955, the grab failed, exit immediately the liquidity grab entry, 0.6948, 15M close below 0.6950 after spike above 0.6954, stop loss, 0.6966 take profit 1, 0.6925 risk, reward, 1:1.3 R invalidation, void if 15M candle closes above 0.6955 now. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. Strategy 3, the session swing, trend alignment. This is the trade that aligns with the monthly strong buy structure, and it uses the fake breakdown I mentioned. The market is setting a bear trap below S1 at 0.6912. I want to buy the dip that washes out weak longs and triggers the leveraged short stops. The exact trigger is a 4-hour bullish MACD divergence combined with a 4-hour candle close above the 20-period MA, currently at 0.6950. But we enter earlier on a limit order at 0.6915, just above S2. That level is a previous structural support. The stop loss goes below the daily structure, at 0.6865, beneath S3 and the weekly S1. That's a 50 pip stop. Take profit 1 is conservative at 0.6980. They. Weekly 20 MA and near R2. That's a 1 minute and 1.3 seconds R, but more importantly, a high probability touch. Take profit 2 is a stretch target at 0.7050, the daily 50 MA and a major psychological number. Once price reaches halfway to TP1, at 0.6945, I trail the stop to break even. The invalidation that shifts the medium-term outlook is a daily close below the 200-day MA at 0.6897. If that happens, this swing is dead, and we pivot to a full bearish campaign. The session SNG entry, 0.6915, limit order, for H bullish divergence confirmation, stop loss, 0.6865 take profit 1, 0.6980 take profit 2, 0.7050 risk, reward, 1:2.6 R, to TP2, trailing stop, to break even at 0.6945 invalidation. Daily close below 0.6897, never risk more than 1 to 2% per trade. Scalps demand even tighter risk. Keep it to 0.5% because the noise can stop you out before the move. No positions through high-impact news. And tomorrow is the Australian Employment Report. Stops are non-negotiable. This is how you survive to trade the next big move, and in this coiling market, survival means staying liquid for the explosion. The single most critical level for the next session is 0.6966, the daily 20-MA. As long as that holds as resistance, every rally is a fade. But the minute it breaks, the structure resets, and the swing trade takes control. Tomorrow, the Australian employment data hits, and if the number misses, the floor at 0.6897 will be tested fast. If it beats, that coiled spring releases to the upside, and the swing target 0.7050 becomes the magnet. I'll have the updated blueprint 24 hours from now, same time, same place if you want the full breakdown on trading commodities, Aussie, Yen, Euro, and Bitcoin. The videos are live now, tap the end screen. Then hit the bell so tomorrow's alert lands before the open. Hold the like button and subscribe. Every signal helps the algorithm bring you the levels that matter.